Here are 3 reasons why to subscribe to Fridge Financials on YouTube. Number 1, it is free, which is the best price that you can pay for this kind of content. 2, I am completely transparent with all of my investments. And number 3, I have a variety of educational videos every single week. Now let's get on with the video. What is up, YouTube, and welcome back to another Fridge Financials video. And in today's video, we talk credit cards, specifically the following. What are credit cards, how you're able to use them, why is our debt so high, and what can you do to have limited credit card debt, if none at all. So if you're excited for today's video, make sure that you smash the thumbs up button, subscribe to the channel if you've not already done so, and turn on all bell notifications for all the future uploads. I was watching the other night on Instagram this reel from Dave Ramsey, and I think Dave Ramsey's a very intelligent guy. Don't get me wrong on this one. But I saw a thing where he was like talking about how credit cards are the worst thing possible, and how why do you even have a credit card? You don't need a credit card. And there's some truth to what he's saying here, but I want to talk about my opinion on it. Again, I'm not a financial advisor, and this is not financial advice, but I want to show you basically what my reasoning is behind it. We're going to look at a couple different articles from Yahoo Finance, as always, because they have really great information sources, I should say. And yeah, so let's dive into it. First things first, as you can see, our credit card debt in the United States has been absolutely outrageous. We passed over $1 trillion in U.S. credit card debt, and it just keeps being up on the rise. Now, we had a little bit of a cool down right on here, which is with COVID-19 and the pandemic and everything like that. So we had a little bit of a dip around here, but then it's gone straight back up after that. And now we are sitting at over $1 trillion in credit card debt. Not something that's good to know. And as someone who's a high school math teacher here, I look at this and I have talked to students before about finance, stuff like that, and like, Mr., how does a credit card work? How does any of this work? And so I've tried to bring forth that education, and I thought, why not make a video that goes out to hopefully more people than just the high schoolers, because you never know. Maybe someone's watching this and they don't have a credit card, or they've thought about getting one, or maybe they're sitting in credit card debt right now. So the first thing that I kind of want to dive into is essentially how credit cards even work. And this is a beginner's guide from February 27th. Again, Yahoo Finance has a lot of really good informational sources. You can look at the personal finance tab. They have all these different things here. But I want to just break down some important things as to how they work. So how does credit cards work for consumers, which is like me and you and everybody else? So when you apply for a credit card, the bank or card issuer assesses your financial history, income, debt to income ratio, and other factors. So when you're applying for a credit card, you can't just apply and just get one. You have to go through a process. They look through your financial history. They look at how much money you're making. They look at what job you have. They look at all these different factors to determine if you are someone that's financially stable enough to even have a credit card open. If you have $0 and you've defaulted on loans before, and your job is paying you literally nothing, yeah, you probably won't get a credit card approval. Because at the end of the day, if you spend all the credit card and you max it out, but you don't pay it back, that's a big problem for the banks or whoever else issues you the card. So you have to get for approval first. There is a credit limit. Now, the maximum you can borrow on the card is a credit limit. So, my credit card limit at one point was like $5,000 per month. I think I just upped it recently, now to $7,500 per month, and you cannot go over that. So whenever you hear someone max out a credit card, it's because they have literally hit their maximum credit limit that they have. Making purchases, in case, again, this is a beginner's guide to everything. I'm trying to kind of just bullet point these quick things here just to give you the understanding about how credit cards work, right? So with your credit card, you can make purchases by swiping, tapping, or inserting your card. Each transaction borrows funds from your credit limit. Your credit cards are offer flexibility in handling immediate expenses, allowing you to spend without having cash on hand. So essentially, you're spending this money, but it's not actually your money. It's whoever's issues the card. It's coming out of their amount first and everything else. So for example, like if you have like a Capital One credit card, they're basically have this credit for you from your credit limit, and then you swipe the card. It comes out of your max credit limit that you have. And then what happens at the end of the month is that at the close of each billing cycle, whether it could be the 1st of the month, it could be the 7th of the month, you can adjust it however it is you want. The card issuer sends you a statement detailing your transactions, total balance, interest if any, and the minimum payment due. Statement is your monthly financial snapshot, helping you understand and manage your expenses. Personally, what I do is with my monthly statements in particular, I have it set up where I get text messages and email notifications from my issuer from my credit card. And I do that because that way I know that my bill is coming up, I know to put money aside for it, and to make sure I pay it off in full. Now, with repayment, there's different options you could do. So your credit card statement will indicate a due date by which you should pay, just like when you have like rent or, or mortgage or anything else. Timely payments are required to prevent late fees and contribute positively to your credit history, which is important to know because you need to have credit. Ideally, you'd pay off the full balance to avoid interest. However, some cards, like the Chase Slate Edge credit card, have intro offers with 0% APR for a set amount of time. For that one, it's 18 months. Basically mean that you can spend as much money on you as you would like to on this card and not gain any interest on it for those 18 months. And interest is usually what's killer when it comes to anything with student loans or credit card loans or mortgage payments or car loans or whatever else you want to think about. Those all are ones where interest rates or interest in general is what could definitely hurt you, because you might have heard of the idea of, or you might have heard of people talk about student loans, how they've paid so much into it and they still have more than halfway to go. It's because of interest. Okay. So obviously my go-to strategy for my credit card is to pay it off in full every single month. I've never done a minimum payment amount for my credit card since I've had it open. I've had now open for I think 4 years. I'm not really quite sure, to be honest. Something along the lines of that. But you have different things you can do. So you can pay off the whole thing, or you pay the minimum amount that they tell you that you have to pay off. So if you spend $300 on a credit card, your minimum payment might be $35. The problem with that is just like what we're talking about down here. If you don't pay off the entire balance, the card issuer will charge you interest on the remaining amount. The interest compounds, which if you've watched my other videos, compound interest is the 8th wonder of the world when you're investing, but it's also one of the biggest killers of financial well-being, financial freedom, if you have compound interest in the negative way, which is with loans. Which means over time you'll owe more. Interest is a headache for many credit card issuers. Carrying a balance, so on and so on, can balloon the amount you owe, making it hard to pay down your debt. Now again, so if say your credit card balance was $300 and then you pay the monthly minimum of say it was $50, that means you still owe $250 on your credit card. That goes over into next month, and that gets hit with interest, which is the APY, APR, those kind of things you might be used to seeing, right? The problem is that credit card interest rates, if you ever look at your statement, credit card interest rates are 18 to 22 to even 25% interest, which is absolutely insane. So if you have $250 left over that you got to pay off and have a 20% interest rate on it, essentially, you're paying an extra $50 just in interest for the following month, or whatever the percent could possibly be. So not only did you not pay off your full credit card amount, you still owe that much, plus you owe $50 in interest, for example. So the $50 you paid off, you just got back in interest, essentially. Interest is what's killer, and it's the worst thing possible here. Now, this is where I kind of differ from Dave Ramsey, because Dave Ramsey's video talked about this idea of, he was saying that, it's ridiculous that we have to spend thousands and thousands of dollars for like $10 back or $100 back. I think the video he said you have to spend $100,000 on a credit card to get $1,000 back, which is true. It's 1%. I mean, yeah, he's not wrong in that aspect. I completely get the math on that one for sure. But as you use your credit card, you may earn rewards. Depending on the card, after you make purchases in an eligible category, your points, miles, or cash back are tallied. These rewards are typically available for redemption, so on and so forth. And you build your credit and everything else because you want to build credit, because the more you show that you can pay off money that you're borrowing, the banks like to see that, and it builds your credit up and everything else. Whether you're paying your money back on time, you're making monthly payments, and you can show that you can sustain these kind of loans back, it helps build your credit, which might come in handy if you want to borrow money for a house or borrow money for a car. So banks like to see those high credit score numbers, especially when it comes to a mortgage payment or anything else. And if you have a higher credit score, they usually tend to be a little bit better for you when it comes to borrowing money at lower percent interest, which is really, really nice. Again, it can lead to better interest rates, loans, higher credit limits, and more favorable terms in various financial endeavors. Credit cards versus debit cards. Now, people always talk about the difference in the two. Oh, I have a debit card. Dave Ramsey talks about having a debit card and how a debit card's all you need. There's also Mark Cuban who said if you have a credit card, you're already behind. And again, to me, that's just not true. I don't buy that at all. But basically, a debit card is you swipe the card and the money comes right out of your bank account. Swipe the card, it comes right out of your account, whether it's with your checking account right there. And then that's it. The transaction's done. There's no fees or anything else. You pay it and that's it. Obviously, if you don't have enough funds in the checking account, then you got to pay overdraft fees and everything else. Credit cards are different because credit cards you're borrowing money from the credit card company, and then you end up paying it out of your bank account at the end of the month. So for someone like me, right, who really likes to, run the numbers, try to be financially free, working on earning more money and building up their, net worth and everything else there. I'm not someone who goes out and spends a lot of money. We did a breakdown sheet actually like last video or 2 videos ago. I think it was 2 videos ago now about how I spent my $4,000 a month as a teacher in high school. And I put like 30% of it towards investments, 30% towards bills and expenses, and 30% towards, I think 30% was like bills, 30% was expenses and everything else. But essentially it all built up to the same thing. It was rent, it was food, it was gas, it was the electric bill. It was all these things that are required to be paid off. Now, what makes the most sense is that I'm using my credit card for necessities. I'm not going out and buying Starbucks every single day. Sorry, 2040, if you're watching this. I'm not going out and buying lunch every week. I'm not buying dinner. I'm not going out to movies. I'm not doing these crazy things, right? And so I'm not really charging my credit card up that much. What I put on my credit card are things that are necessities. Food, gas for my car, the gas bill, whatever it could possibly be, right? And what that does is my card right now gives me 1% cash back. So if you look at these two options, and again, this is from my perspective, not from everybody else's. This is my point of view. If I'm going to spend, say, $2,000, regardless of being on my debit card versus my credit card, but the credit card, I can get 1% back, which would be like $20. I'd rather have the extra $20 than just spending $2,000. I get something back at least when I use my credit card. But the problem is with credit card debt, and it's the huge problem, is that credit card holders, most of them are carrying, 49% of them are carrying debt from month to month. They're carrying so much debt with them because they can't pay off their bills. And this is the biggest problem, is that when it comes to personal finance and anything with finance, if people don't read up a lot of it, don't, do research on it and everything else, they fall into the same trap where it's like, I have a credit card, I'm going to start swiping it over and over and over again. And when I swipe it over and over and over again, oh crap, I got to pay that off. I don't have enough funds for it. I don't budget accordingly. I don't have that kind of money available. I didn't put money aside for it. Okay, now I'm in trouble. Let me just do the minimum payment and let me just go on to the next month. Let me just push back the debt. I just push it under the rug. I'll pay $50, whatever. I'll deal with it next month. And then they don't deal with it next month and the next month. And it just compounds and it just builds. So it's a problem, It's very, 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 very frustrating to watch and to see what's happening. Credit card delinquencies have also soared more than 50% in the last year, with the Fed's report finding that about 6.4% of all accounts are now 90 days past due, up 4% from the end of 2022. So you're looking at still credit card debt is going through the roof. And again, you saw the chart from before. It just keeps going up and up and up and up and up. That's not good. That's not good. But Yahoo Finance and Fridge Financials has you covered as to why you don't have to pay these things. Because credit card interest and fees is over $130 billion. That's not even just actual transactions. That's just interest and fees, $130 billion. That is ridiculous. 5 ways to minimize it. Don't get interest. Pay off your credit card and pay off the whole thing. Even if you start small, put $100 on the credit card for the month. Just $100. You get 1% cash back maybe. That's $1 back, but you don't overspend. You don't get hit with the interest because the 1% cash back you get is way better than the 20% interest you got to pay extra with. And that's how credit cards are able to make a lot of money, is because they do something just like that. So avoid the interest. Be careful with that one. Interest is ridiculous. It's ran 15.4% per above the prime rate. The average credit card APR is 22%. So be careful about your spending. Watch what you're spending. Watch what you put on the credit card. If you're going to be doing some crazy expenses, I would say probably switch to your debit card and keep track of your statements and set it up where that way you get notifications so you know where your credit card is going to be at and what your balance is. Avoid racking up late fees. Late fees is a big thing. When you don't make at least the minimum payment. Now, this is people who don't even make a payment. Not just a minimum payment. They're not making a payment. They will most commonly charge credit card fees accounting for $14.5 billion and often cost them to about $40. Imagine paying $40 on a credit card because you didn't even make one payment. You didn't even make the minimum. Like, if you can't even make the minimum payment, this is that video to watch. And if you're still watching this, make sure you subscribe to this because I'm trying to really help out here. If you're not even making the minimum payment, reevaluate your credit card. And that's the time where I think Dave Ramsey and Mark Cuban are right. Cut up the credit card, figure out your finances, learn how to budget, learn how to be financially stable and financially responsible with your money, then open up a credit card. The more knowledge you have, the better off you are going to be. I can promise you that. Return payment fees. This fee can be charged to your account if you don't have sufficient funds. Again, more financial struggles, and more financial responsibility here. You don't have it. If you don't have the funds, don't run your credit card if you don't have the funds. Balance transfer fees. It's another one. Cash advance fees, foreign transactions, fees for opting in, so on and so on and so forth. Apply for a balance transfer credit card. You can do that, and you can transfer to a 0% credit card. And the reason why people do this is because if you transfer to a 0% interest rate for a 12 to 18 months or whatever it is, right, that gives you that 12-month period to chip away at that principal, chip away at what you spend without gaining interest on it. Say you transfer over $5,000, you have 12 months to pay off the $5,000 before you start getting interest on that one, maybe. So please, if you think about doing it that way, chip away at that $5,000, chip away at that couple $1,000s. Try not to run up the credit card. And while you're chipping away at your debt, don't run up the credit card more. Bad idea. So that's another thing, which is a balance transfer credit card. Consolidate credit card debt with a personal loan is another possibility as well. And then consider debt relief options. The most common debt relief option, hopefully, after you watch this video, is to subscribe to Fridge Financials on YouTube and follow him on Instagram at Fridge Financials. This is not a paid promotion. I'm self-promoting because I need subscribers. But on a serious note, seriously, I mean, I look at these articles and I'm just like, guys, like, it's easier said than done, but the more knowledge we have on credit cards, the more knowledge we have on debt, the more knowledge we have on interest rates, we can start to grow our financial portfolios and really start to get on that track to be financially free. So at the end of this video here, again, just my 2 cents. Again, I'm not a financial advisor by any means of the imagination here, but just what I've learned over the years. Just because Dave Ramsey and Mark Cuban say, hey, don't have a credit card, you're going to already be behind. It depends. It really, really depends on what your financial knowledge is. If you feel like you're not good with money, credit cards probably won't be the thing for you until you really start to, bring some knowledge about finances and everything else. If you have a pretty good understanding of financials and you understand how to budget and how to maintain your balance and how to save money, credit cards might be a good thing because, again, at least you're getting something back for it. I think I've spent probably like $15,000, $20,000 on my credit card over the last couple years. Just from using my regular bills and everything else, I made about $200, $300 back. I mean, and I haven't missed one payment. So, things to consider, of course. Again, make sure you're doing research as always. Thank you so much for watching today's video. If you made this far in the video and you're not subscribed, please tell me as to why. Because I could always do better, obviously. I'm not any means a financial expert. I'm not any means a YouTube content creating expert. I'm just here to bring forth some knowledge as a regular high school math teacher. Thank you so much for watching. I hope you guys are making money in the market, as always. And I will see you guys in the next video.